Hey guys, DJ from PTA here. Want to go over the GameStop, AMC, IGMS, and Play moves today, as well as Hood. Hood made a nice move as well. Want to go over these stocks to kind of just give you an idea, market structure, and how to play these stocks, as well as discuss my winners. Um, the first stop that I played was GameStop. Now, I want you to pay close attention because I stated in the video in the header, if you lost money on GameStop, if you lost money on AMC, you need to watch this video so you can understand probably why you lost money on both of these trades. Um, One of the things that I notice is that people place trades. Again, I'm based on time and price action. Time, price action, and volume is the three elements I use when I place trades. So I want to kind of go over these things to kind of give you an idea exactly how to play them. So next time you don't lose money, or per se some people lost a shirt. So let's go over GameStop first. GameStop has already been rallying up. It's got a lot of news. Everybody's looking at it. It's a meme stock. So any of those type of things I always take into consideration about volatility. Whenever there's a lot of people looking at something, and especially when it's something that is like a meme stock, you tend to get a lot of volatility. You don't want to get caught up in that volatility, and that's usually when you start to either wipe out your accounts, take out 3-4 days worth of massive gains and different things of that sort, which is just not worth it in the long run when you're placing trades. So, winner number one was GameStop. This is one that took a while to manifest, but I played GameStop the same way I played AMC. Why? Because both charts look the same. So let's go over it. So we got a nice run up on both weeks of this week and last week. Um, Again, we had a massive run up, and for me, just knowing trading, like there's no pullback. There's no day that it actually went red where some people are in the trade on the short side. So this is something that I look for, or I look at when I'm in a trade. So I knew that one of these days, especially with this candle, we had a big stretch. These candles are relatively the same size if you minus the wicks, and then you had a massive strong buy day on the day before, yesterday, on the stock on a Monday coming out of the weekend. So I knew I was due for some type of pullback. That's literally how I think about it before coming to the market. Now, let's break this down into the 1 minute. And the reason I do that is because I want you to kind of think about what's going on here. You had a pull, push, pull up, and then right out the gate, first minute of the morning, you get a just drop to the downside, right around $6.70, $6.50 drop to the downside. That's in the first minute. Second minute, massive rip back up, basically just retrace this whole gains. $6.44, a loss of $6.44. Then you had a continuation, indecisiveness, push, and then a complete collapse. When I see things like that, that's just complete market manipulation to me. Don't play no parts of that. How? Because I don't trade the first 5 minutes. That's one of my rules. It's something that I teach people. I know some training courses out there tell people don't trade the first 30 minutes, the first hour of the trading day. These are the reasons why. Most of the pro traders do not trade in the first 5 minutes. The reason being is unless you have a lot of conviction based off of pre-market action, that in most cases you're going to either get some type of whipsaw in action like this because of the volatility, because you got all these orders and people who wanted to get into these orders pre-market, as well as people who saw it on Friday that wanted to get filled, so on and so forth. You get this high volatility first thing in the morning, this big $6, $7, $8 moves to one side and another. I mean, clearly, just look at the price action on this. I mean, literally, if you took your count from the lowest point to the highest point, you're looking at almost a $16.70 move. That's just not sustainable. Now, some people are able to play that. I'm not one to be able to play that type of move. It has to set up for me. I have to see it before it happens. I can't predict something like this. And somebody might have made a lot of money playing it that way. But most of the traders I know are just not able to predict that type of movement. And plus you wanted to kind of settle down because of the price action. So because of that, this is probably why you lost a lot of money. Now, let's circle back. I want you guys to kind of take a look at this because I say this in the Discord about market manipulation. Now you had this nice run up on GameStop. Now let's look at the AMC chart. Don't that look eerily similar? Nice little run up. You had that one peak out day, and then you had that breakout day, which was Monday, which was yesterday, and then you had a pullback. If you look at GameStop, same deal. Nice run up, similar day, and then big day, and then a pullback. So it's no secret that everybody was kind of playing these stocks the same way. So this is the reason why I used the same setup to get in it. So breaking it down to an hour, I didn't really get. We had this big wash, and then we had this quick rebound. Then we had a pull up, and then we had a pullback. This is where I thought this was a good entry at, and this is where I took my trade. It's right in this area here, off the hour. Now, if we break it down, guys, if you follow me, I like to play the 30-minute. My first point was here, so I removed this. So again, push down, pull up, push down, hold, and then I'm waiting for the break. That's pretty much the pattern. So if we take this down to a 5-minute, it looks a little bit more cleaner. Push down, and let me kind of draw it up so that you can understand what I mean by this. So we look at this on the draw up. Had your push down, pull back up, and then you had your bounce. Swing, swing, swing. So we clearly see that there's buying pressure coming in there. Took the trade somewhere right here. So that's the pattern that I'm looking for in those particular stocks when you get a massive drawdown. Because what this is that shorts took over, taking profit, try to push it down again, buying pressure stepped in to pull it the opposite way. So what we're looking for is that same type of pattern when we're trading. Let me break this down to the 1 minute so you can kind of see the entry. My entry was right off of this candle here. So looking at my order fills, 182.62 was the entry. So I was looking for that 182.75 break, which was off the previous 30-minute, and then it pushed and pushed out. So figure at 182, 62, 182.62 entry. First push up was right around 188, and then it pulled back down. And then at this point, that's when I start to take a look at the higher time frames to follow along with the trade. So I didn't really get out most of my shares until about 190s. So I took off most of my position in the 190. I caught a few up here. Looks like 190, 193.90 is where I caught some of the shares at. But majority of my position I got at a 190.87. So you figure from 182.62, 190, good $7-8 per share move. So did very well, but I had to be patient and wait for the trade to set up. Similar trade on AMC. So let's go over that one. Again, we talked about the massive pull up, just like you saw in GameStop, right? One of the key areas that most people were looking at. And again, let's go over that 1 minute just so I can show you guys. It did the exact same thing. Dropped it, ripped it up, got everybody involved, and then slammed everybody. So when they slam everybody, it's pretty much how, you feel like you got taken advantage of. So it spooked some people, and then some people took advantage of it and made money. For me, AMC, I just pulled it off of this area right here. So again, same pattern. What I look for is, let's break this down to the 5 minute, is this pattern here. So let me draw it out for you. Massive pull down, bounce, go back into the trade. So I got my higher lows. So when I saw that, that made me very, very interested in the trade. I always like to see my 30-minute pullback. And then that was a hammer. So that was a good indication that this thing can go higher. So draw my areas. And then I'll wait for the trade. So if we break this down to the 1 minute, you can see it here. Pull down, held, push back up. So what I end up doing was I end up getting filled right about here. I believe it was 28. See what the entry is here. Okay, yeah, 28.52 is my entry. So got in somewhere right here. Waiting for the 29.25 break. When I got it, let it rip. That's when you go to the higher time frames. It could be the 5, 15. I usually use the 15. And this one I end up using the 5, particularly looking at my order. So I end up getting a couple shares off in the 30-20 area. So that was a good dollar gain, $1.50 gain. And then I took the rest of the shares off right here at $29.90. So good $1.50, $1.75 gain on that one. In and out. So once it started to break down, it broke this pattern and then it started ripping up again. I could have probably taken a second trade, but I was in another trade, which was this was the first trade. This could have been your second trade here for the rip off the 30-minute, but again, I just had already made money from it, didn't want to give nothing back, and I hadn't been watching the price action on it, so I just decided not to play that again. So that was my second winner. My third winner was play, which was David Buster's. David Buster's was an interesting play as well because it was doing the same thing that I like to do on the weekly. It was steadily going up. And this one, I was actually speaking to someone in a room in reference to this play, a guy I know, well-respected trader that's a shorter, who saw this trade on both sides. So I saw it from the long, he saw it from the short. The reason I saw it from a long is because I was looking at these key areas. In this week, I had to figure today, yesterday, and today being the beginning of this week. When I started to look at it from a daily aspect, I see that it was like, making the pull, it confirmed a pullback, and now it's going higher. Once it took out previous week high, that's what this gray line is for me. That lets me know where it stands. So also you got to remember that 49.44 was the 52-week high. So we had a lot of things pushing towards that information for me to think that it was going on a long side. So as I looked at the trade bouncing back out on the hour, I had to let it run up and then pull back some. So I got that pull back on the 30. what was interesting was how it pulled back. So this right here is, again, I like to see that signal of a hammer. So it was right here. And remember, we're already pushing up. So the other trades were more of a downward move. This one was more of a push up. I wanted to go sideways this way and then pull and go the opposite direction. So looking at this, it took a while for it to form. So here go the pull down, the push up, and then I was looking for that break. So my order came in off of the 46.0. Let me see. I actually got filled in at 46.03. So let me put that order in for you, 46.03, so you can kind of visually see it on the chart. Let's make this one this color. So right there, 46.03 is about where I got in at. Now, if you look at it, it's right close to the 30-minute pull up. So this is your 15-minute pullback into the 30-minute. So the second candle is confirmation. Remember, pullback, reversal, confirmation. I got in right off of there. Now, the reason why I like that trade, go back to the 5-minute, gives me that pattern that I like to pull down, push up, pull, and snap back. It really looks clear on the 1-minute. Pull down, push up, hold, push back. So when I see that move, that's what makes me interested in getting into that trade. So I only had, literally 50-something cent risk from here to here from the swing low. So I figured, hey, let's load up. So I was feeling good, had a couple good trades up under my belt. So I went on and went in pretty heavy on this trade. So after that, now it's following price action. So if you look at this chart, you can tell, looking at the 5-minute, kind of went up, went sideways. This spooked some people. But again, I'm already at break even. So then it pulled back. Once it ripped again, then it went sideways, and then it ripped. That's when I started to notice that this stock may have had legs. But more so, I looked at the 15 because it never broke a higher low until here. So this was my first area of concern. So let me remove some of these lines so I can tell you how I protect myself in the trade. Right here, once it pulled up, I looked at this key area and it broke out. And then it ripped back up really quick again on the 15. So when you look at it on a smaller time frame, let's say a 1-minute, it was kind of a dip. But you see how it didn't naturally really close, came right back up. It didn't actually close down there on the red side. It just kind of ripped and then kept going. So that gave me some motion that I was okay in that trade. So I let it do what it did. See how it did not close below the previous low of that 5-minute. So when I saw that, the 15-minute, it didn't close below it. It kind of opened here, went up, went down. But when I go down to a smaller time frame, you see that it did not close below that line. So that gave me confidence that it was going to keep going higher, and it did. So as it continued to go higher, once it violates a time frame, what I mean by that is once it breaks a higher low in another time frame, what I do is then go to a higher time frame to stay in the trade. So as you can see here, it was just clean going all the way up. It wasn't until I got out here that I decided at 49.40 that I was going to get out. So that was a good from 46.03 to 49.40. I mean, that was a good $3. And I had majority of my shares, I would say 80% of them, I rolled it straight out. Now I loaded shares off here and loaded some there. Because right here is where it got kind of interesting, looking at the 1-minute. And this really why the gentleman I was speaking with on the short side got chopped up. All this pulling back, because it looked like it was pulling to make a option to pull back and actually flush right here off of the 15-minute. And that was this candle here. Let me take this profit, right? This was this candle here. it kept going back and forth for a while. So my assumption that it was going to actually uh, go down, but it didn't. So needless to say, he took a loss on that trade, but he's smart, managed his risk, and he'll come back and trade another day. But looking at that, the price action just showed me and the momentum and everything that it was going to go on the upside. So um, again, when you start to place trades and you're in a trade, you want to start moving to the higher time frames to get an idea, get a big picture of where the trade can go. Especially if you're already up, especially if you already took profit, you got a little bit of your goal. Then from there, let the trade play out. Look for spots to add into a winner. That's how you're going to stay consistent in trading. So the next one I wanted to go over. This is one I did not play. And this was actually a pretty good winner as well. This was shouted out in the Discord, but again, I just didn't see it, and I wasn't keeping a good eye on it. It was IGMS. IGMS had a pretty good trade on it as well, and it was a nice little couple key areas on it. So it was a gapper, so it gapped up in the morning. Typically, I see a lot of the gappers nowadays is gapping up and then kind of fading. So I kind of kept my eye off of it, not really knowing, not really knowing where the stock was going to go. So I had to keep an eye on it, but I lost track of it. Was looking at other trades, and then the move happened. So as we scroll down to the 30-minute, you see that it went up, pulled back. This is a 30-minute pullback. I always tell you guys I like, right? So we had to pull it back, reversal, then confirmation. So if you look at this chart going into it, you can look at this 5-minute. You can really see the pull, and then if you go back to the 1-minute, that same pattern again we discussed of it pulling down. This one did a bit of a consolidation, went up, pulled back, went up, confirmed again by pulling back, and then ripping higher. So right off that pre-market highs where most people got in at, and then right here at 2337 area, once it confirmed a close here, you probably could have got it off of that 2375 area, off that high, off the high of this candle, and then kind of just risk to the bottom. You know, that would have been only $1 risk, but it definitely, once it did that, you figured your entry was here. You know, ideally your entry probably would have been right there. For me, that's probably where I would have got in, somewhere in the 80s, somewhere like that. So you got your entry right there. It wicked up, shot to 25, so you could have got a buck. Then pulled back. Now you in a winner. You still got your stock sitting back here. It wicked down, kind of bounced around for a while, touched the price, and it kept spinning, 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 and then it went higher. So the way you avoid all that, again, higher time frame. So when you see that it violated, you go to the next higher time frame. So now it wicks down, and now it takes off. So looking at this, you see you stay in this time frame, boom, it hasn't violated. It just violated it there. So 32.61. So easily could have been a $8 move, $9 move. I know some of the traders in there were releasing shares in the 34s, watching the price action off the 1-minute. So it just depends on how you trade and how you look at it, where you let the stock kind of form, bounce, 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 and you see right there, as soon as it hit that 32.61, it just collapsed and pretty much stayed under that 32.61 for the remaining part of the day. Had a little pop here and a little pop there, and one right here. That lets you know that that was a zone. You can kind of look at it and see that it was just absorbing so they can take it down lower. So really fantastic trade on the upside. I think that a lot of people did well on this one, so I expect to see a bunch of videos on this one too. Next trade was Hood. Hood had news and about expanding their hours or whatnot, and we can see this pull and then a jerk move. Now let's go back to the weekly so you can kind of see how the weekly was setting up. Still making higher lows. So there was no violation here at all. So ultimately, you knew that it was still in this trend. Probably after it got over this weekly area of 1386 is when it started really flying. So let's go back down to the chart and see that. So 1386 is right here, right in this zone, and it took off. Now, I like to see a violation on the hood, on hood. It never did a 30-minute pullback. It just never gave you that opportunity. It just had too much buying pressure. Uh, so when you look at stocks like this, you want to go down to the 5. I usually look for a pullback on a 5-minute or 5 or 10-minute pullback. I usually only use the 5-minute for that. So right here was the key area. It violated it here and then ripped higher. So again, reversal, pullback, reversal, confirmation. So your entry could have been about right there, 1439. A lot of people waited to get up here simply because they wanted to confirm that it was going higher above this area. So they looked for the close. Okay, once it closed, it took off. From there, I mean, it went from 1439 to 1649, which was a nice move. And you could have been still holding shares depending on your trading style. So those are the ones I wanted to kind of go over, educate you on. Again, the biggest piece, as stated earlier, is really this AMC move and GameStop. Remember, don't play the first 5 minutes. This is the reason why. This is how you lose your shirt. Those type of moves are devastating because you just can't predict that stuff. You just can't. I mean, look at GameStop as well. You just can't predict these type of moves. And if you be careful and not trade in this time frames, the smaller time frames, or just in general, be careful on the timing of when you place trades. Um, Give it some time. The first couple of minutes of the day is very volatile. You get a lot of circuit hawks and market hawks and stuff. You don't really want to get caught in that. You want the trade to formulate and form and break out naturally into the way it's supposed to go, whether it's breaking up, or breaking down, or whatever the case may be. So you want the stock to form. That's your biggest thing. So guys, I hope that helps you out. If you have any questions or anything, leave it in the comments. We'll be trying to, surely someone in our staff will reach out to you. But as I always tell everyone in the Discord, anyone who watches my videos, stay studying and stay focused.